All right, good afternoon, everybody. Here is a quick trade recap of the 0 days to expiration SPX call credit spread that was taken today in the small account mastery. And we'll go ahead and break it down. So before I talk about the setup, let's talk about what it is I did, or that we did, I guess is what I should say. So today's expiration, we entered in a 40, 85, 41, 41.10 call credit spread for $3.60. So for one position, and yes, I only got one because I am trying something out, not throwing on a huge amount of, let's say, a large position size as I'm trying this method out. And I'll discuss the method here as well. So for $3.60 for one position, it is a max profit of $360. And what this was a Delta 30 25 wide call credit spread. Some of you may be familiar with my drama free trade trading strategy, and this is just a variance to it that I'm working with to minimize risk, tighten up risk to reward, and potentially make more money out of it. Who knows? We'll see. But max profit is 360, and this, my stop was going to be 2 times the credit received, making the max reward 360, right? My loss at my stop loss level is going to be 360, but it's a delta 30, so I already have a 70% probability. And then with technical analysis, you add more probability into your setup. And I'll explain why we entered, why we exited, why I only closed it. I ended up closing it for only 50% of the credit received. Only 50%. So risking 360, walked away with $180 profit while risking only 360. Now going from there, why in the what did I do everything? Let me pull up the screenshots that I took before and after. There we go. Sorry, I was looking for it. Okay, so time of entry. All right, so this is time of entry, right? The market is obviously up and rallying right now, right? It's been pushing up. If I pull up my quickest stuff, we are up almost 1%, been oscillating. Now we're testing VWAP right now. But the market's been, it was up quite nicely today, and the market was up quite a bit yesterday. And if you recall on my plan of attack, I was, if you didn't see the plan of attack, I'll go ahead and throw the little thing at the top for today if you wish to watch that. But I'm kind of expecting maybe somewhat of an inside day between the 20 SMA and the 21 EMA. We'll see. I mean, go either way, and Powell speaks tomorrow the next day, so things could be crazy. But that being said, we are extended and was looking for some sort of a pullback. So what was the setup? That's enough talking, Cody. What was the setup? All right, so first, there is a Voodoo Fireline up here, which is the most important of Firelines, which are levels from David Starr that are I don't even know the mathematics behind them, but they work. But we're rallying right up into the Fireline. Also, I have the 4-hour quant pivots. So what are quant pivots? Quant pivots spits out some data of where it measures the move. And basically, this is H2, H1, L1, L1, L2. Basically, um, H2 in the 4-hour time frame. So basically, if you think about it, if we reach H2 in the 4-hour time frame, basically heading into, I'll pull this up, heading into 4 hours past, we shouldn't pass this line theoretically. And what I mean by theoretically, because we only close above H2 in the 4-hour time frame. Look right here, we close above H2 only 10% of the time. So we hit it once, hit it twice, and hit it a third time. So as price rallied up into here, we also have a fire line up here. So I'm okay with going ahead and initiating a call credit spread while having risk on the other side, right? So we shorted the rally based off of price rallying into the H2. Like I mentioned, has 10% of closing above it in a 4-hour time frame, so that's all the way into noon. And when we entered, just like it shows here, it hit it and pulled back. That's when we initiated the short entry. And if we look at it now, you see how it fell again, and then hit the 8 EMA, the 15-minute 8 EMA right here, pushed up, and then as it came back down again, I closed it right before the flush. But it's okay because I didn't want to be right again and giving me a chance to get out again and then not take it, because you have to admit the trend is higher right now, and there's no reason. You have to ask yourself, do you want to be right or do you want to make money? And I wanted to make money, and so 50% was good enough for me. So like I mentioned, hit this H2 area. We sold the 4085, right? So it's outside of the fire line. And we got this rotation, the signals to go short. We entered the position. Like I mentioned here, price rallied to the 4-hour quant pivot. Statistically, it says it only closes above that level 10% of the time. We got rotation signals triggering entry. And heading to the afternoon, I was looking for price to go sideways to down, staying below the fire line and the H2 quant pivot, which it did. And it says right here we entered the 4085, 4110 call credits for 360, and that's the parameters. Now, when we exited, it was right here, and you see how it tapped it a few times. So got in short here, rallied up, flush, rallied up again, a flush. So when it came down the first time, it tested here and held, rallied up, tested H2 again, and then fell back down to the 18. Once it fell down again here, that is where I decided to go ahead and lock up the position for 50% of the credit received. I know I didn't cover that setup in the plan of attack, though I guess I could have, but it just wasn't, I guess, in my mind then. We're going to look at this real quick, and you see how entered the position at 360, have my stop up here. It did rally up to about break even, and then that's when we got it to flush. Got out about right here at 180. So overall, now the trend is starting to, looks like it wants to go sideways to down for the day, but we'll see. But that's the trade there. So hopefully everyone found it helpful. And just a quick recap, this is just a variance of the type of drama-free day trading I'm doing. I've been doing these actually delta 30, 25 wide spreads with 2 times the credit received. I'll just put CR for credit received for your stop loss. So it makes your trades 1-to-1. And so it makes it a little bit easier to scale out at 50%. And then if you hit your like 80, then you're like, that was a solid trade. So the risk reward is slightly a little tighter. And what I have noticed with trading this type of spread, your stop loss isn't actually until your short strike gets in the money, and that's kind of when you're stopping out. So it kind of makes it a little bit tighter. Risk reward based off of that type of method. But anyways, we'll see more of this playing out. Hopefully that was helpful. I'll stop rambling now. But if you found this helpful, feel free to like, subscribe. You know the shindig. Feel free to ask any questions if you like as well. I answer all the comments and questions that are put in these videos. Have an awesome day, everybody. Hope you're having a strong start to your week, and we'll see what happens again tomorrow. Take care, everybody.